This new 15% duty Section 122 powers invoked for a 150-day global levy. India-U.S. trade talks rescheduled as negotiators reassess tariff fallout after Supreme Court verdict. Trump raises global duties to 15% amid interim pact uncertainty. Brazilian President Lula da Silva calls on U.S. President Donald Trump to treat all countries fairly as Washington imposes a new 15% tariff following an adverse Supreme Court ruling. American economy cools more than expected in the fourth quarter amid shutdown disruptions. No tax cuts and artificial intelligence investments are expected to bolster growth in 2026. Iranian officials hopeful of progress in nuclear talks with U.S. negotiators as meeting resumes on Thursday in Geneva despite a significant American military surge across West Asia. U.S. envoy Steve Witkoff says President Donald Trump is asking why Tehran has not capitulated yet under mounting U.S. military pressure aimed at forcing a nuclear deal. U.S. Secret Service agents shoot a shotgun-wielding man who breached security at President Trump's Mar-a-Lago residence in the early hours on Sunday. New York Mayor Zohran Mamdani orders city's traffic network to remain closed to all but emergency travel as a powerful snowstorm slams the northeastern United States. And Russian President Vladimir Putin says strengthening nuclear forces now an absolute priority after the expiry of Moscow's last remaining nuclear arms treaty with Washington. And we continue to track the big story that developed over the weekend as the Supreme Court of the United States struck down Donald Trump's executive orders on emergency tariffs as illegal. At a news conference Friday afternoon, U.S. time, U.S. President Donald Trump criticized the justices, two of whom he appointed, who ruled against him. He later invoked Section 122 of the Trade Act 1974 by slapping 10% global tariffs on all trading partners and just 24 hours later raised that to 15%, the maximum permitted under the Trade Act. Now, this new tariff rate of 15% is valid for 150 days and may be extended only upon the approval of the U.S. Congress. According to a White House fact sheet, exemptions will continue for sectors under separate probes, including pharmaceuticals, as well as goods entering the U.S. under the U.S.-Mexico-Canada agreement. So what does the Section 122, under which Trump's first introduced the 10% tariff and later raised them to 15%, exactly say? Well, Section 122 is part of the Trade Act of 1974, which gives the U.S. president a temporary authority to impose tariffs without long investigations or detailed reviews. Specifically, the president may impose a temporary import surcharge called a tariff of up to 15%. The tariff is meant to help address situations where the U.S. faces a large and serious balance of payments deficit, essentially when the country is importing far more than it is exporting in a way that it hurts the international financial position. Any tariffs under Section 122 can only last up to 150 days unless Congress votes to extend them. No formal investigation or multi-agency process is required. The president only needs to make the determination and publish the tariff order. Trump argues this keeps the tariff legally valid while his team explores more permanent trade laws or other ways to continue tariffs. Remember, no president has ever used Section 122 before. Now, as countries across the world study the Supreme Court ruling and Washington's latest moves, let's take a closer look at what it means for global trade before we analyze what this specifically means for India.
U.S. President Donald Trump on Saturday said he will raise a temporary tariff from 10% to 15% on U.S. imports from all countries, the maximum level allowed under the law. The move is in response to the U.S. Supreme Court's decision to invalidate his previous tariff program that it said exceeded his authority as president.
The Supreme Court's ruling on tariffs is deeply disappointing.
The new levies are grounded in a separate law known as Section 122 that allows tariffs up to 15%, but requires congressional approval to extend them after 150 days. Trump, in a social media post, said he would use that period to work on issuing other legally permissible tariffs. French President Emmanuel Macron on Saturday weighed in on the U.S. Supreme Court's ruling.
First, I think this invites everyone to reflect. It doesn't seem bad to have Supreme Courts and therefore a rule of law. For those who think Supreme Courts create problems in political life, a Supreme Court looked at the Constitution and said, this is not in line with the Constitution. Now everyone says this is great. There you go. It's good to have checks and balances in democracies.
Trump has shown little sign of backing off his global trade war. In the hours since the court's 6-3 decision, he has attacked individual justices in personal terms and insisted he retain the power to impose tariffs as he sees fit.
All right, so that's a deep dive into Section 122. But what does this specifically mean for India? Well, India now faces a reduced tariff rate of 15%, down from the earlier proposed 18%. Remember, following an agreement on a framework for an interim trade deal earlier this month, the U.S. announced it will cut the reciprocal tariff on India to 18% and remove the additional 25% secondary tariffs. Now, up until last week, India's goods exports to the U.S. were subjected to 25% reciprocal tariff. The February 6th joint statement on the framework for an interim trade deal proposed lowering this tariff rate to 18%, but the change was yet to be implemented. Now, starting tomorrow, that's February 24th, the 15% global tariff rate will apply to India's exports. Now, this brings India at par with other countries like China, South Korea, Japan, almost all of ASEAN, plus Kazakhstan, Turkey, South Africa, Libya, Brazil, Mexico, and Canada, which will all be subjected to this lower tariff rate of 15%. So let's break this down with our experts, in fact, joining us on the show this morning. Barnik Chitran Matra, PE investor, managing partner, Chrysalis Equities, and Mithali Nikore, founder and chief economist, Nikore Associates. First up to you, Barnik, 15% for 150 days. Then what? Will the U.S. Congress, that has anyway been divided over Trump tariffs, allow the tariff rate to stay?
Yeah, so I think let's reflect on the 15% first. I think there is still a question mark because the 15% as per Section 122 is actually framed as a surcharge. So if you look at the full 15%, it is supposed to be in one scenario added over the 3.5% of the most favored nation tariff. So it's quite likely, again, subject to fine print getting clarified, that the tariff rate for all countries moves to 18.5%. You make an important point that 18.5% is likely to be applied to all nations and there's no differential basis. Now, let me give your viewers a little bit of a backdrop of Section 122. Section 122 has a very unique history in the US, as in no US president has applied it. The genesis of Section 122 was actually Nixon in 1971 applying an international surcharge of 10% on Trading with Enemies Act, which the Congress felt was far-reaching and gave him the buffer of Section 122 to deal with the collapse of the gold standard and an international payments crisis at that point. Now, while the GATT Section 12 or Rule 12 allows countries to impose such rules, it is frowned upon by GATT. It is quite likely that several countries, including China and European Union, may challenge this in GATT, and several prominent economists, Geeta Gopinath among them, have confirmed on X that actually the US is not facing a balance of payments crisis because the trade deficit does not account to be having a balance of payments crisis. So this is a very generous interpretation of balance of payments crisis. I expect this to get challenged at WTO by several nations, maybe not India. And after 150 days, the likelihood of Congress extending it is also reasonably low, because another development last month is that a group of Republican congressmen broke away from Trump to actually invalidate his Canada tariffs So the likelihood of Congress allowing this global surcharge applied to all nations after 150 days is also unlikely. So again, I think there's no need to react with haste. There is still a lot of flux going on. There's the issue of the tariff refund, which is still to be litigated.
Of course.
The weekend, Costco has already sued the US government. So there are so many moving parts. I think, if any, India is now in a position of strength, right? And the tariff deal signed as of, or agreed to upon last month, as of now, is completely worthless, with a much stronger Indian negotiating position as we speak today.
All right, Barnik, we will come to the refunds issue specifically in just a bit. But Mithali, I want to understand from you, 15%, at least for 150 days, unless there is more litigation at WTO and Trump is forced to sort of withdraw this 15% as well. But 15% definitely better than 18%, which is much better than 25%, which is a lot better than 50%. And these are all the tariff rates that India has been subjected to over the last 11 months. But the volatility and the indecision continues to be scary. How should businesses plan their trade with the United States?
No, absolutely, Karthik, and I totally agree with Barnik. With this analysis that he's presented. At the end of the day, we are entering an era where there has been a clear sign from the Supreme Court in the U.S. that the president had overreached. They pointed out in their judgment that this is a clear case of presidential overreach. So what we are going to start to see in the next 6 to 8 months is literally a situation where the president is then grasping at straws. Even with the application of this section 122, I mean, at the end of the day, this is also an example of grasping at straws. You literally need something to justify the legality of an action which is actually illegal in US law, which is illegal in international trade. And if we look at the international trade architecture, whether it's the World Trade Organization, whether it's the GATT, as Barnik was talking about, the agreement on the General Agreement on Trade and Tariffs, these agreements were actually spearheaded by the United States. I mean, it was in the 1960s and 70s that the United States actually engineered a global order where there would be more and more free trade, open trade, less trade barriers, whether it's tariffs, which are direct trade barriers,
Yeah.
or even non tariff barriers. So, honestly, in the months to come, I believe that global trade will be subject to a lot more scrutiny, a lot more uncertainty, and a lot of, just actions which may not be justified in the law.
All right. Of course, that justification and the legality is going to continue to be a question that looms over U.S. President Donald Trump and his tariffs. But remember, this end of 150 days will leave the U.S. president with just about another 100 odd days before the midterm elections. And we don't know how that's really going to pan out for Donald Trump. But stay with me, Barnik and Mithali, because there's more to the story. And this comes by way of India rescheduling the proposed meeting of their chief trade negotiators, which was set to begin in Washington this week, as both sides now assess the implications of the U.S. Supreme Court's verdict on sweeping tariffs. The Indian delegation, led by Commerce Ministry Joint Secretary Darpan Jain, will not travel to the U.S. this week. Rather, will now meet at a mutually convenient date after reviewing these latest developments. Remember, the U.S. continues to remain India's largest goods trading partner, with bilateral trade touching $186 billion in 2024-25. So, Barnik, in effect, where do these developments leave our framework of the interim trade deal with the U.S.? Can we now assume that that framework is pretty much null and void and there's going to be another clear round of negotiations or not? And we'll just have to wait it out to see which way the story goes.
No, I think it is very clear that that framework has been held null and void by the recent Supreme Court ruling. If you look at the entire history behind the Liberation Day tariffs, I think Trump imposed those tariffs to get leverage with trading partners to get to deals he would find favorable. Now, in the absence of a legal basis, his strength disappears. And I think the way the Indian delegation is thinking about it is that now is the opportunity, in case the US delegation does want to come back to the table and negotiate, is to negotiate a far more favorable deal with the Americans beyond the deal which we'll have, which includes dropping the rate from 18% below to something closer to 7-8%, revisiting Section 232 sanctions, where the duties on steel and aluminum continue and were out of this trade agreement, And also, instead of giving blanket access to some agricultural products from the US to India, actually proposing a far more phased access with a phased duty structure. So this just strengthens India's hand to negotiate a far more favorable deal than the one which was agreed to in terms of a framework a few weeks back. And please note, right, I think the Indian negotiators will be well aware that whatever trade deal they now negotiate with the president still has to be ratified by US Congress, because the Supreme Court has very clearly articulated that tariff is a tax and the purse of power resides with the Congress and not with the president. So any deal negotiated with the US by any country has to be subject to Congress ratification, which only, by the way, with midterms and a likely change of power, at least in the House of Representatives, is only going to strengthen the hand of negotiating countries like India. So all in all, it's actually good news for India. We are likely to get a far more favorable trade deal in the medium term than what we had agreed to in the last few weeks.
All right. So, Mithali, I'm not sure whether we'll call India being lucky or India being smart in not striking the trade deal earlier. But where does this leave India's sort of competitive advantage over the rest of the world? Because we were celebrating the better tariff rates that we had got as compared to many other trading partners of the US. So where does this leave India and the rest of the world now, especially with our export competitiveness, which is now pretty much flattened out with respect to the rest of US's trading partners?
So I think, Karthik, it's two sides of one coin. I think the two regions which have done very well in this entire period of turmoil in global trade. The first region I would say is the European Union, because the European Union used this momentum of losing out its most preferred trading partner, that's the US, to actually stitch up deals with regions across the world and diversify their trade channels immensely. So think about how the EU signed deals with Latin America, a deal which actually was stalled for nearly 25 years, and then went ahead and signed, agreements with China, signed the mother of all deals with India. So that puts the EU actually at the center of a lot of global trade in the new global trading order. India has, I would say, is the second region which has done very, very well, because if we look at our own, trade deals that have come through in the last 3 to 4 months, we have gone ahead, had trade deals with Australia, New Zealand, the UK, of course, the EU mother of all deals, and also with the Gulf countries, which again, within the global south, places India at the center of a lot of global value chains and supply chains. So,
Right.
these two regions I feel will continue to do well in the years to come, and diversifying away from the US will continue to be a priority regardless of what happens. In terms of our hand, I just want to say we've inherited a strong hand, but that doesn't mean that we don't invest in our domestic capacities. We have to continue to improve our export competitiveness in terms of logistics, in terms of processes, in terms of manufacturing, so that we continue to offer, export competitive products to the world, and also on innovation, because we can't rest on our laurels. At any point, anything can change in the global trading world. That's the one lesson we are taking away.
Absolutely. Uncertainty is the only certainty. And it seems from what I'm hearing from you, Mithali, that the side stories of the India-US trade deal by way of all the other FTAs that we signed over the last 1 year have turned out to be bigger stories than the India-US trade deal itself. But let's leave it at that. Thank you, Mithali Nikore, Barnik Chitran Metra, for your time this morning. And well, let's stay with the tariff story and other reactions coming in from world leaders, including in Europe. But first up, let's listen in to Jamieson Greer. Well, U.S. Trade Representative Jamieson Greer says countries that have reached tariff deals with Washington are not backing away, despite the Supreme Court striking down a large portion of President Donald Trump's tariff policy. Now, speaking to CBS, Greer said he is in active talks with several partners and has already spoken with his European Union counterpart, with more discussions lined up. He added that so far no country has indicated plans to walk away from existing agreements, saying, and I quote him, "I haven't heard anyone yet come to me and say the deal is off," unquote. And the European Commission is urging the United States to stick to last year's trade agreement after President Donald Trump announced fresh global tariff hikes a day after an adverse Supreme Court ruling. In a sharp statement, the Commission said a deal is a deal and stressed that as America's largest trading partner, the European Union expects Washington to honor its commitments. Now, the call comes just a day after the U.S. Supreme Court ruled much of Trump's tariff campaign illegal under the International Emergency Economic Powers Act. Now, despite the ruling, President Trump temporarily raised global import duties to 15%. The EU says its exports must continue to receive the agreed treatment, warning that unpredictable tariff moves risk destabilizing global markets and supply chains. The EU and United States last year struck an agreement setting U.S. tariffs at a maximum 15% on most European goods, and the EU Trade Committee was due to approve this deal this week. But the latest Supreme Court judgment casts doubt on that happening. Time for a very short break, but markets not as jubilant as one would have expected after the U.S. Supreme Court striking down Trump tariffs. What does this mean for Indian exporters? What does this mean for retail investors? We'll get you a sharp perspective on that on the other side of the break. You're watching Morning Brief at 9.
रश्मि, ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ। छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े, नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। पर बेटा, इनका फ्यूचर? बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है। अभी तो इसकी जीत के इरादा पक्का है। करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ अपने लिए, अपनों के लिए। पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
दूरियां कोई अपनों में ना रहे, दिल में जब उमंग हो, घर है वही जहाँ सब संग हो, रिश्तों को रंग दो, दुनिया को रंग दो।
Birla Opus Paints.
Welcome back. You're watching Morning Brief at 9 right here on News 9. Time now to take a look at the stock markets. Let's begin first with the United States as stocks closed higher on Friday, lifted by gains in major tech heavyweights. Shares of Alphabet, Amazon and other market leaders climbed after Supreme Court ruled against President Donald Trump's global tariff measures. Investors welcomed the decision, viewing it as easing trade-related uncertainty. Google parent Alphabet surged more than 3%, helping drive broader market gains. Take a look.
Wall Street's main indexes ended higher on Friday, with the Dow adding nearly 0.5%, the S&P 500 gaining about 0.7%, and the Nasdaq climbing 0.9%. The U.S. Supreme Court struck down President Donald Trump's global tariffs in a rebuke of one of his key economic policies. Trump called the ruling a disgrace and said he would impose a 10% global tariff for 150 days under Section 122 of the Trade Act of 1974. Anna Rathbun is founder and CEO of Granadilla Advisory.
The markets are mostly in the green and have been throughout the day. And honestly, that is the market feeling a bit of burden coming off of its shoulders. But it has been moving sideways during the day, not going straight up. And the reason for that, I think, is because it's still uncertain. Just because a ruling came in striking down Mr. Trump's tariffs, that doesn't mean that we're going to have additional tariffs. And we just heard today that we will. And 150 days later, things might change again. So it makes the future uncertain.
Some of Wall Street's most valuable and widely held companies rose, including a more than 3.5% rise in Google parent Alphabet. Shares of Amazon and Apple also rallied. Shares of several retailers hit by tariffs also gained, including toymaker Hasbro, online furniture retailer Wayfair, Pottery Barn owner Williams-Sonoma, and luxury furniture seller RH. Among other movers, shares of Akamai Technologies slumped 14% after the cloud company forecast first quarter adjusted profit below Wall Street estimates. Meanwhile, data released early in the day showed U.S. economic growth slowed more than expected in the fourth quarter, while a separate reading indicated inflation picked up in December. Traders see just over a 50% chance the Fed will cut interest rates by its June policy meeting, according to CME's FedWatch tool.
And let's stay with the U.S. tariff story and the impact on stock indices across the world. And Asia is pretty much mixed in its response to the U.S. Supreme Court striking down the Trump tariffs imposed earlier. In fact, you can see pretty much the Hang Seng up almost 2.25%, which is almost exactly as much as Taiwan's TAIEX has declined, pretty much indicating that no real Asian economy now seems to have an edge over the other. Meanwhile, Japan's Nikkei 225 is down about a percentage point or so, and South Korea's Kospi is up about a third of a percentage point. Indian markets, meanwhile, holding up strong, but perhaps not as strong as one would have expected. Both Sensex and Nifty up more than half a percentage point in early trade this morning. In fact, Sensex is up almost 500 points as we speak right now at about 83,317 levels. Meanwhile, the Nifty 50 is up about 200 odd points or so, maybe a little more at about 25,727. Remember, still quite a distance away from those lifetime highs of above 86,000 and 26,300 that we had seen respectively on the indices. But the tariff rate coming down from 18% to 15% for the next 150 days should have added a little more cheer to the indices, but that seems to be absent. Meanwhile, the small cap index, the traders, largely those that operate in the gems, jewelry, leather, textile space, which export to the US, are performing a little better than the headline indices, up about 0.75 of a percentage point. Volatility is a little low, but still elevated at about 14 odd levels. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are leading to the gains this morning. The heavyweight Reliance is up almost a percentage point or so this morning. Reliance Industries up 0.96% right now. ONGC, meanwhile, down almost 2%, 1.79%, almost 1.8%. Overall, the banking sector is looking fairly healthy with all shades of green visible on the Nifty 50 heat map and mixed cues coming in from the tech space. While TCS is up about 2/3 of a percentage point, Infosys is correcting downwards, down about 1/3 of a percentage point. Meanwhile, the auto stack also looking fairly healthy. Eicher Motors is up about 1%. M&M, Maruti Suzuki both up more than half a percentage point. The non-energy minerals, the steel, the aluminium stocks are also in the green this morning, despite the fact that potentially the existing tariff rates on this sector are likely to stay in place. Let's put all this into perspective with two guests who are joining us this morning. Let's understand from them what the latest move in the US means for not just the Indian stock story, but more so for retail investors. Shweta Rajani, Associate Director and Head Mutual Funds, Anand Rathi, joins us this morning, along with Kranti Batini, Equity Strategist, Wealth Mill Security. Kranti, to you first, just help us put into perspective all that we saw over the weekend, the massive swings that we saw, beginning with the US Supreme Court, followed by the 10% levy that was raised to about 15%. Overall, it seems that the 15% headline number is better than the 18% that we were otherwise subjected to. Overall, from an equity standpoint, where is the story right now and where is it headed?
Karthik, good morning to you. You are absolutely correct. The kind of events that took place during the weekend in the past 48 hours, it created a lot of uncertainty. But by and large, when we compare the earlier tariff rates and the current tariff rate of 15% flat, it's going to be positive for the market. But it's also created a lot of uncertainty how fragile the global trade situation is right now. Look at it. The earlier statement 24 hours back, the tariff was announced at 10% and subsequently it's rise to 15%. So this number seems to be very small, 10 to 15%. We normally tend to say casually, but look at 10 to 15% is 50% rise. But still, when compared with the earlier slabs of 18%, still it's low. But by and large, there is a lot of uncertainty. And last 48 hours from Friday, there are around 211,000 containers have been waiting at different ports in U.S., valuing around 10 to 15 billion dollars. They're just lying in the ports to just get cleared. So these are the kind of measures that are taking place at this point of time. Of course, equity markets cheered the move. It's a second setback for President Trump administration consequently. Last week, they had a fortnight back. They had the U.S. U.S. House that has been rejected the tariff on Canada. Just like the Trump administration has to work when they're taking these kind of measures, which are creating uncertainty in the global trade, not only to U.S., across the global trade. By and large, the events, the Supreme Court judgment is most welcoming move for all the countries, and it's a cheering moment for all the exporters to U.S. But by and large, still, it's creating a lot of day by day ambiguity. The current measures also just valid for 150 days. But what happens after 150 days again? So these are the kind of situation that we are going through. Definitely, it's the mood is definitely fragile.
Right. The mood is fragile, but the money is anything but. Shweta Rajani, how are retail investors expected to tide through these volatile times? What should be their strategy? If we talk about mutual funds, what kind of funds should they really be betting on? And beyond mutual funds, what is the kind of caution that investors, the retail investors particularly, should be wary of?
Good morning. So yes, with this news around the tariff and Supreme Court rejecting, saying that the tariffs have been illegal, newer tariffs coming in under Section 122. All this brings in some amount of uncertainty, but also this certainty that the tariffs are going to be somewhere in teens. Now it's about how, the renegotiations take place. But that's one part of the story. If you look at the broader market fundamentals, the domestics are going very strong, whether you look at the overall domestic macro situation, the valuations, we are very much sitting reasonable. We've gone through a time and a price correction both. So this is making the current entry level very attractive. From an entry standpoint, earnings have, somewhere been a mixed bag, but more, I would say, in line with the expectation for a lot of sectors and these segments. So if I look at the broader picture from a retail investor standpoint, one, if you're investing in equities, it's always going to be a medium to long-term horizon. And that looks very much steady even today. So if you're entering into equities with an expectation of a double-digit return or 11 to 14% return, which is way better than the other asset classes, that story still holds true. So from a retail investor perspective, I think they should not be disturbed by this the various news going around and continue with their SIPs, their lump sum investments that they were doing, because from a 2-3 year perspective, I think the story holds very much strong. Okay. In terms of where they should look at, I think a portfolio which would have around 50 to 55 large, the rest between mid, small, would be a good allocation to go ahead with.
I was just going to ask you that question, that should one increase the allocation of small caps in their portfolios, given that these are the sectors which are likely to benefit the most from exports. But you're still saying, Shweta, that maybe 50 to 55% should be locked in large caps. So why not increase the exposure to small caps if that is where the export dividend comes from?
So, within the mid and the small cap space, if I look at how the earnings are playing out, mid caps are looking far more steady from an earnings expectation standpoint. Small caps, yes, in pockets, earnings are coming in double digits, steady earnings coming in. But I would say if I want to balance both a return expectation as well as the risk or the volatility that one could expect from maybe the next few months perspective, because there's still uncertainty. Yes, you could have textiles, autos, gems and jewelry, which majorly are in small cap to benefit, but you have equal and good amount of stories even in the large and the mid cap space. So that's where a 45% allocation to mid small, which should be equally split, would be a good balance to have in the portfolio, keeping the short term volatility in mind as well.
All right. Kranti, I also want to talk to you about the fact that as stock markets continue to be volatile and with all the tensions which we are seeing, perhaps simmering to some extent, but too early to call the US-Iran talks stroke action in West Asia. But overall, given the volatile situation geopolitically as well as now with respect to equity markets, gold, the safe haven investment sort of, continues to climb. In fact, it rose about 1.2%, again breached the $5,100 per ounce mark. Silver also climbed about 3% and rose to about 87.10 per ounce, more than the 2-week high. In the same time, the dollar has fallen as traders are still taking in their stride the US Supreme Court's decision on the tariffs. So overall, how do you see the gold and the silver story panning out from here with the volatility that we are seeing in the stock markets? And should investors really look at adding more precious metals to their portfolio?
Karthik, it's a very interesting question. I come across with different people. But when the silver was at the peak of the market in the recent month back, there was a lot of speculation that was going across the globe, not only in India. And those people who never called me in the last 10, 15 years also, my phone was ringing. Okay, they want to invest and ride on to the silver rally. That's what the situation is. So there was a lot of speculative activity around the bullion markets in the recent past, in the past 1 quarter. And you mentioned the silver and gold as the safe havens. Yes, of course, they are perceived as the safe havens. But if anybody bought these asset classes, both the precious metals at the peak of the cycle in the recent past, their portfolios have corrected. Look at silver, it got corrected around 50%. So these asset classes where they are perceived as low beta and also low volatile, but they have become very highly volatile at this point of time. Of course, still they carry the tag of safe haven, but I don't think so going ahead whether the safe haven tag is relevant for these assets, because they also behaved like equity market in the medium to short term. So some part of the allocation is definitely needed, but not for the speculation in the medium to short term. But definitely one can buy on dips in a very staggered manner. There is no hurry. They're not going to run away anytime. So slowly adding the precious metal, it can be silver as gold, as a part of portfolio diversification is warranted.
Okay, Shweta, do you concur? Do you think safe haven not as safe as it used to be, and should buy on dips as a strategy be valid even for increasing the allocation towards these precious metals as part of an individual retail investor's portfolio?
So absolutely, the perception that gold, silver, or commodities are a safer haven clearly is not true when you look at the data, because if I look at 5-year, 7-year, 10-year rolling periods, and I look at the volatility of gold or silver versus equity, actually equity tends to have 1 or 2% lesser volatility than that of gold or silver. So that's enough data suggesting that you may want to consider it as a portion of your portfolio, but it can't be something that should take you away from equity. So it cannot be that you shift away from equity to have gold or silver in the portfolio, but yes, does it substitute for debt? That, definitely. So if you hypothetically, let's say you had an equity debt allocation of somewhere around 70 equity, 30 debt, 70 equity should remain as is. But the 30 debt that you may have kept in your portfolio from the risk management standpoint and the diversification standpoint may be split into having a 15 to 20 debt and 10 to 15 commodity in the portfolio. So that shift would still hold true. And if it's right now, if you look at the prices, they are still a little overvalued. So if you see some valuation correction in commodities, you may want to consider this debt portion shifting into commodities.
All right, Shweta Rajani, I'll thank you for taking our time and being here with us this morning. Kranti, continue to be with me because I want to discuss two very specific sectors with you this morning. And first up, Kranti, I want to talk about the energy space. And it seems that whatever crisis we are seeing in West Asia, it is likely going to add some sort of a disruption, if not perhaps, before things begin to ease out, if not an imbalance in the trade route, especially when it comes to oil. I want to talk to you about the petroleum story, and we are seeing mixed reactions today. Reliance is up about 0.8%. ONGC is down more than 2%. What do you make of the energy story in India, given what we are seeing in West Asia?
Yeah, any kind of uncertainty or geopolitical escalation in West Asia, definitely it's going to have impact on the crude in the medium to short term, Karthik.
Okay.
But after this Supreme Court judgment, how the Trump administration is going to move in the next couple of weeks is definitely the important thing one need to track in the medium to short term. But as long as the crude oil is hovering between $60 to $70 per barrel, there is nothing a worry factor or any red signal for Indian markets are concerned. But anything, if the crude escalates above this range, definitely it's going to have impact on Indian economy. It's going to have impact on the inflation, because right now the kind of uncertainty that's rising, the domestic macros are intact in the medium to short term also. Now we don't have clearly what kind of oil that is coming from Russia. That's not there right now. It is completely closed by and large. So the Venezuelan oil is getting pumped into the markets going ahead. So by and large, there is plenty of oil is there right now.
Okay.
But the medium to short term, these geopolitical escalations definitely going to create some kind of a spikes. But by and large, we can expect the crude is going to be in this range of 60 to 75. This is the range we are witnessing despite of the heightened geopolitical escalations also.
All right. And Kranti, I also want to touch upon HAL, particularly as a stock. The third Tejas has crashed yesterday. And again, spelling bad news for investors invested in the HAL story. That stock is down about 1.27%. Fundamentally, is the Indian defense manufacturing story, especially the one dominated by HAL, at risk?
By and large, these are the initial stages. The inquiries are going on. One thing is investors, it sent a negative signal when the Tejas crashed in the Dubai Air Show. But we are at the early stage right now, whether it is the manual error or definitely there is any technical error with respect to the machine is concerned, that's still at an evaluating stage. But by and large, given the kind of focus of the aircraft manufacturing is concerned, especially for the defense aircraft theme is concerned, HAL still leads the theme. So given the kind of management commentary also looks attractive on a longer term basis. So investors who have the risk appetite at this point of time, one can use this downtrend to accumulate HAL, because this is the company looks promising for the defense manufacturing and the fighter jet manufacturing is concerned in India. So the investors who have risk appetite, one can accumulate this stock going ahead also. So, but one key concern, if at all anything technical that erupts in terms of their manufacturing capabilities are concerned, okay, that can be a negative for the stock in the medium to short term. But by and large, given the kind of focus we have with respect to the defense fighter jet manufacturing is concerned, one can keep adding HAL on a medium to long term perspective.
All right. Seems like a counterintuitive bet right now, given, of course, the latest Tejas crash. But let's leave it at that. Kranti Batini, as always, pleasure having you here with us on News 9. Another corporate news, IDFC First Bank has uncovered a massive 590 crore rupee fraud at one of its Chandigarh branches involving government-linked accounts. The irregularities were discovered when Haryana government departments requested account closures and fund transfers, revealing discrepancies between reported and actual balances. Now, following the revelation, 4 bank officials have been suspended and the bank has launched a forensic audit to investigate the extent of the scam. Police investigations are also underway and the bank is cooperating reportedly fully with authorities. The bank has clarified that the fraud is is confined to specific accounts and does not reflect or affect other customers. As part of recovery efforts, lien markets have been requested on suspicious beneficiary accounts maintained with other banks. Now, this comes after Haryana government had de-impaneled IDFC First Bank and AU Small Finance Bank for government business, instructing all departments and PSUs to transfer funds and ensure compliance with approved procedures. The IDFC First Bank has also informed statutory auditors and convened its audit committee and board of directors to monitor the case closely. Strict disciplinary, civil and criminal action is being pursued against all involved as investigations continue into fraudulent activity. And time for another short break. When we come back, we'll discuss the U.S.-Iran talks expected to be held in Geneva starting Thursday. Is a diplomatic breakthrough likely to come through? All this and more on the other side of the break. You're watching Morning Brief at 9.
This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.
Careless travel, choking hills. If we don't change now, there won't be much left to enjoy.
We need to follow the Bhutan model, regulate people who can access hills.
News 9 presents Heal the Hills, continuous coverage.
When drinking water turns deadly, it demands answers.
What is really going on there?
News 9 brings you.
Imagine water that you drink.
Contaminated drinking water in Indore, revealing a disturbing link to at least 15 reported deaths.
Typhoid outbreak in tribal areas. 104 patients.
After 15 people were killed.
Foul, frothy water from taps.
You would assume it's safe. It turned deadly.
How is that happening?
Different cities. One national crisis. Bharat. Quest for clean water. News 9. In your interest.
Welcome back. You're watching News 9. This is Morning Brief at 9. Time now to pivot to other global stories making headlines this morning. Well, diplomacy may be back on the table between Washington and Tehran despite rising military pressure. Iranian officials say they remain hopeful of progress when nuclear talks with the U.S. negotiators resume on Thursday in Geneva. Now, Oman's foreign minister, also acting as a regional mediator, announced the talks would restart in Geneva this week with a positive push to finalize the deal. Iran's foreign minister Abbas Araghchi said key details of a possible agreement are now being worked out. The diplomatic effort comes even as the United States ramps up its military presence in West Asia, deploying 2 aircraft carriers, additional fighter jets and bolstering air defenses. Now, Western powers fear Iran's nuclear program could be aimed at developing a bomb, a claim Tehran strongly denies, insisting its uranium enrichment is for civilian use only. Meanwhile, U.S. Special Envoy Steve Witkoff says President Donald Trump is curious as to why Iran has not, in his words, capitulated despite America's military buildup in the region. In an interview aired on Fox News, Witkoff said the president has warned Tehran of serious consequences if a nuclear deal is not reached and is weighing multiple options. Witkoff also confirmed he met exiled Iranian figure Reza Pahlavi at the direction of President Trump, though he stressed that U.S. policy remains focused on Trump's diplomatic approach. Meanwhile, Iran's Foreign Minister Abbas Araghchi says a draft proposal for a possible agreement with the U.S. could be ready within days. And U.S. Secret Service agents shot a man armed with a shotgun after he breached the security perimeter of President Donald Trump's Mar-a-Lago property in Florida on Sunday. Officials say the incident took place around 1:30 a.m. while President Trump was in Washington. The suspect, a man in his early 20s, was spotted near the north gate carrying a shotgun and a fuel can. Agents ordered him to disarm, but authorities say he raised his weapon, prompting agents to open fire. The U.S. Secret Service, which is tasked with protecting the president and other senior leaders, is investigating the incident. White House Press Secretary Karoline Leavitt later blamed Democrats for an ongoing partial government shutdown impacting the Department of Homeland Security, which oversees the Secret Service. And the U.S. economy expanded at a slower than expected pace in the fourth quarter. The slowdown was partly linked to disruptions from last year's government shutdown and softer consumer spending. However, economists say tax cuts and continued investment in artificial intelligence could help support growth in the months ahead. Take a look.
U.S. economic growth slowed more than expected in the fourth quarter amid disruptions from last year's government shutdown and a moderation in consumer spending. The Commerce Department's advance estimate of fourth quarter gross domestic product showed the economy grew at an annualized rate of 1.4%, well below economists' forecasts and a stark decline from the third quarter GDP rate of 4.4%. Growth in consumer spending also slowed from the third quarter's brisk 3.5% pace. The report, which was delayed by the record 43-day government shutdown, highlighted a K-shaped economy in which upper-income households are doing well, while lower-income consumers are struggling amid high inflation and stalling wage growth. Meanwhile, a separate report from the Commerce Department showed that underlying inflation increased more than expected in December. The Personal Consumption Expenditures Price Index, excluding volatile food and energy components, rose 0.4% in December, more than economists had expected. That lifted the so-called core PCE to an annual rate of 3%. Economists estimated core PCE inflation could increase again in January and bring the annual rate even higher to 3.1%. The U.S. Federal Reserve is aiming to bring inflation down to an annual rate of 2%. The data likely strengthens the expectations that the Federal Reserve will not lower interest rates before June.
And it's just Monday, but it's already shaping up to be a pivotal week for global markets. From AI bellwether Nvidia's earnings report to potential political tremors in Europe, investors are bracing for a busy week in business and finance. Corporate results, economic data and geopolitical developments are all expected to drive market action in the days ahead. We leave you with this report.
As global markets react to the U.S. Supreme Court ruling on President Trump's tariffs, NVIDIA earnings head for center stage. These are the stories to watch in business and finance in the coming week. Markets will be watching for NVIDIA's quarterly results Wednesday, as investors worry about returns on AI spending and industry disruptions caused by the emerging tech. NVIDIA shares have soared following the launch of ChatGPT in late 2022, but shares of the company and others in the Magnificent Seven have stalled so far in 2026. Tuesday marks the 4-year anniversary of Russia's full-scale invasion of Ukraine. While the push for a ceasefire continues, getting one over the line remains difficult. Ukraine has faced sustained pressure to agree to a deal that could mean painful concessions, as Russian forces pound its power grid and slowly advance on the battlefield. The International Monetary Fund looks set to rubber stamp extended support, meaning Kyiv's bonds are flying high. Australia's consumer price reading Wednesday will be closely watched by investors, who are betting the central bank will hike rates at least once more this year. Earlier this month, Australia's central bank became the only one in the G10 outside Japan to tighten policy, as it struggles to bring inflation under control in a supply-constrained economy. British Prime Minister Keir Starmer faces a reckoning Thursday in a Manchester special election. Investors will be watching the results closely. Friday could be another volatile day for British markets and Westminster. British gilts and the pound wobbled earlier this month as a crisis engulfed Starmer over what he knew of Peter Mandelson's links to late sex offender Jeffrey Epstein when he appointed the former as U.S. ambassador.
With the lights dim, legends of cuisine and mixology rise. This is where hospitality meets honor. From iconic hotel bars to unforgettable dining experiences. From chefs who redefine taste to leaders who shape the future of hospitality. Celebrating excellence behind the bar and brilliance beyond the kitchen. Classic, contemporary, chic. Where heritage meets innovation, recognizing the names that set the benchmark and the spaces that define food, hotels, restaurants, lounges, bars. This is not just an award night. This is a salute to the Knights of Nightlife and Hospitality. Lounge Nights Awards, honoring the best, elevating the night. Radical